Wouldn't it be nice to be able to tap into that equity that you've been building up in your property? There are multiple ways that you can do this, but here are two ways, either through a home equity line of credit or a home equity loan. In this video, I'm going to break down what the differences between a home equity line of credit and a home equity loan are. Then you can decide for yourself and your situation which option is best for you. Let's discuss. First, we're going to start off with a home equity line of credit, commonly known as a HELOC. Now think of a home equity line of credit as like a credit card, where you're using the equity inside of your property. So here's an example. Let's say you have a property worth $200,000 and the mortgage or what you owe left on the loan is $100,000. Well, now you have equity of $100,000. Now here's a key thing to note. You're not gonna get a home equity line of credit for $100,000. Yeah, you have that much equity in there, but banks tend to lend out 80% loan to value, or LTV. That's normal for a bank, but some banks might want you to go at 75% LTV, or they might actually go up to 90% LTV. It just depends on certain things. Now, for example, let's say your property is worth $200,000. Now the bank is going to give you a home equity line of credit, 80% loan to value. So that $200,000 property that you have, it's going to be 80%. So $160,000 is what you are left with. Now you have a mortgage or what you owe left on the loan for $100,000. So that's $60,000 spread between the 80% loan to value and what you owe left on the loan. That $60,000 spread is what the bank is going to give you for a home equity line of credit. And you can use that $60,000 worth of a home equity line of credit for virtually anything. But here are some important things you need to know about a home equity line of credit. But before I do that, go ahead and hit that like button for me. And if you are needing help with a game plan to achieve your financial freedom, go ahead and book a call with me using the link in the description down below, because I want to take whatever situation that you are in and help you come up with a game plan to achieve your financial freedom. Here's some important things you need to know about the HELOC. You're gonna have a 10-year draw period, so you can pull out as much money from your HELOC as you need. And then you're gonna have a 20-year repayment period. This repayment period, and obviously that repayment period is what you're paying back on the HELOC, what you took out of it. Again, just like a credit card, here's something that you need to know. If you take out money within that 10-year draw period, that 10 years you're able to pull out money from your HELOC, you're gonna be having to make payments on that too, but the only thing you're gonna have to make payments on is the interest. You can go ahead and make payments towards the principal, but if you pay the bare minimum during the draw period, you're gonna be paying interest only. So your payments are gonna be a lot smaller than what your payments are gonna be in your repayment period. Because during your repayment period, you're going to be paying principal and interest, so obviously the payments are gonna be higher. That's just something to note. Now, another important note to know about the HELOC is you only pay what you take out. So that's $60,000 worth of it. Just think of it again, like a credit card, you're only paying what you pull out of it. Let's just say you take out $10,000 for a home improvement. You're only gonna be paying back that $10,000, obviously, but a lot of people get this confused because I think if they get a HELOC for $60,000, they're gonna have to pay everything back. No, it acts just like a credit card. And that $60,000 is your credit card limit. Another very important note to note about the home equity line of credit is that most of the time it's a variable interest rate. What that means is you might get it for a 3% this year, but then next year you're gonna have an interest rate of 6%. Now you can work with banks. It all depends on the bank. You can get a fixed interest rate, but it all depends on the lender and the type of borrower that you are. Now, before I get into some differences that the home equity loan brings to the table, go ahead and hit that subscribe for me down below and click the bell icon to get notified and upload a new video just like this one. Because this YouTube channel is all about helping you achieve your financial freedom. A home equity loan is exactly what it sounds like. It's a loan based off of your home equity. So back to the example of your property is worth $200,000 and you have a $100,000 loan left on that house. So again, you have $100,000 worth of equity. The same thing applies as what applied to the home equity line of credit, as banks are going to look at the value of the property and they're going to determine what LTV they can give out to you. So it might be 80, typically it's 80%, but they will do sometimes 75%, sometimes even 90%. It all depends on the bank, the type of borrower you are, and some other things. So again, back to the scenario of they're going to give you an 80% LTV. That's going to be $160,000. Again, you have a mortgage left of $100,000. Here's what happens. And this is what divides a home equity loan between a home equity line of credit. Now that $60,000 spread that we're talking about, a bank is gonna write you a check for $60,000 rather than giving you a revolving credit line. So you're gonna get one lump sum of $60,000. And it doesn't matter if you need all of the $60,000 or not. They're going to write you a check for that if you're getting a home equity loan. But unlike a home equity line of credit, you're not gonna have a variable interest rate. So your interest rate is going to be fixed. And because of that, your payments will be the exact same every single month because your interest rate isn't a variable interest rate. It's staying the same. Think of a home equity loan like a personal loan. You get a loan for a certain amount based off of your equity, and then you're paying it back every single month. This isn't like a cash out refinance, and we didn't even touch on cash out refinances. I'll get to that in another video. So if you want a video on cash out refinance, go ahead and hit that subscribe for me down below so you don't miss that video. Now, cash out refinance, what it does is basically it takes, you know, the value of your home and then pays back the mortgage, the $100,000 that you owe. The bank is going to be writing you a check for $60,000, and now you have one payment. Whenever it's a home equity loan instead of a cash out refinance, what happens is the bank is giving you a loan, so it's not tacked onto your mortgage. So you still have that mortgage to pay, and now you have this. Think of it as like a personal loan to pay. Now you have all the important facts of a home equity line of credit versus a home equity loan. So if you need someone to help you decide which one is best for you and which one could help accelerate your financial freedom, go ahead and book a call with me, and link is gonna be in the description down below. Because I wanna help you find a solution step by step what you need to do in order to achieve your financial freedom. Now there's gonna be a video popping up right here on how you should use a HELOC to buy investment property. So again, if you're interested, it's gonna be right here. Until the next video, I'm out, see ya.